it's time for viewer mail.
And
we have mail.
We have viewer mail.
Yay.
If you would like to send viewer mail in, I will do my best to answer your question. Please send it to doug@riskandrewardtv.org. The tougher the question, the better.
Okay.
Good question this week.
Well, this is from Steve in Arnold, California, and he writes, "Hi, Doug and Brenda. Is Facebook worth $50 billion?
Good question. This has been bandied about in the newspaper and so on, so a lot of you are probably familiar with it. I have no idea whether it's worth $50 billion or not. For one main reason is I have no idea what the numbers are. You know, it's a private company. They're not handing me the numbers to dig into, so I would have no real idea whether that's true or not, but we can learn a lot from that. The first thing is putting a value on something is always difficult. Because really what you feel about something being valuable and what someone else feels about the value of that same thing might be completely different. So valuing something is somewhat difficult. We see values every day in the marketplace because we see a price. And when we see a price, that's the value. That's not necessarily the value, but that's the value that whoever's selling it has attached to it. And that's what they'll sell it for.
And if it's public, we can see the numbers.
And if it's public, we can see the numbers. Now, it's hard to say without the numbers whether Goldman paid the right number or not, and there's a couple things if we dig deeper. First is they took these shares to turn around and sell them to their investors. So they aren't actually holding on to all this. They're raising the funds from their investors to buy these shares. So the investors, their clients, will actually end up holding the shares.
And they get to make a commission?
Well, they'll make a little commission on that.
Commission?
But they also, if you just dig a little deeper, they'll also probably have the leg up on a Facebook IPO. And bringing IPOs to market is another way for investment banks to make money. And obviously a Facebook IPO would be a big profit maker for the lead investment firm that brought them to market. So that's another good thing for Goldman. So there's lots of reasons why Goldman would do this. From your perspective, the lesson here is that the value of something is related to what someone else is willing to pay for it. We see this in markets all the time, but we also see it in everything else in our lives.
So give me an example.
Okay, well that's a good question. So let me give you an example. Take your house. Your house is a good example. You may feel like I feel my house is awesome. It's the best house in the neighborhood and I love living here. This is fantastic. What somebody else feels about that value is completely different. When they come in, and you've seen this if you've ever sold a house, they come in and say, I hate this, I hate that, I hate the other thing, I don't like this,
Yeah, fix the roof, paint the walls, do
that's
this,
right.
do that.
Oh, I would never put up with what you put up with. So when you think about the value of something, what you should do to make the decisions easier to make is put a value on something and then look at what the price someone's willing to part with it is, or what you're willing to part with it, and what somebody else is willing to pay for it. So first put your own value on it and then compare it to the market to see if you're a buyer or seller. So for example, in a house, if I felt my house was worth, I don't know, say $1 million. It's not worth $1 million, let's say it's $1 million. Well, if somebody came and offered me, $5 million, I'm a seller.
Sold.
Sold. Well, she's a seller even faster than I am. But if somebody came and offered to me at $500,000, I'm not a seller because I already know the value of the house. Well, when you're selling a house, it's usually closer than that, but that's the idea. The same's true with anything else. Salaries are often negotiable. Your salary is what you're willing to work for and what they're willing to pay you. It's a negotiation between the two of you. Art, the gold market is nothing more than what somebody else is willing to pay for gold, or what somebody's willing to sell their gold for. That's true of stocks, that's true of gold, it's true of the art auctions. Art auctions are simply what you want to pay. So put a value on something.
Beauty is in the eye of the beholder.
That's right. Put a value on something, the value of to you, and that will tell you whether you're a buyer or seller of it.
Well, this $50 billion, put it into our terms that we could understand.
Well, okay, so
sometimes the number is so huge, it's like,
well, that's a good question. So if you, I like slicing off all the zeros. If you slice off the zeros, it becomes relevant to you, right? So if you slice off all the zeros, the reports were that Facebook had $2 billion in revenues. So they had $2 billion in sales for a $50 billion company. Slice off all the zeros, that means, would you buy a company for $50,000 that only had $2,000 in sales?
It doesn't sound so good to me.
Doesn't say, when you hear it that way, it's like, ooh, that doesn't sound so good.
I wouldn't buy a company
Clearly, the valuation is based on the future. You know, it's the foggy windshield.
Better be some future.
Well, if you turn it into Google, it would be. If you
That's true.
don't turn it into Google, it might not be. So, you know, it's risk and reward. That's the name of the show. That's a risk and reward deal. So there you go.
Yes, it is. And do you have a takeaway for us?
I do, of course. Put your own value on something, then compare it to the market price. That will tell you if you're a buyer or a seller.